Welcome back to Diary of a Speed Reader. Today I'll be talking about my takeaways after reading 300 of the annual reports within the S&P 500. Now, about the first week of April, I decided that in quarantine I would read all of the annual reports in the S&P 500. And this is the third video in a three-part series. I just finished the 300th one last week. I gotta say, choosing to do this in the time of coronavirus has been so fascinating. Remember that the S&P 500 is some of the best executive talent that exists on this planet. It's like watching the NFL for people that are nerds about business. The judgment calls that are being made, fascinating. And in this tough operating environment, if you pair the 10K, which will give you context, with the earnings calls also freely available, the way that people are handling and navigating their companies, it's just an unbelievable lesson. I am awe-inspired by all of it. In this video, I'm going to talk about why the 10K can be valuable to investment. And actually, because of this really unique period that we're in, there's this exciting strategy that I anticipate we'll see in the second quarter, which is called kitchen sinking the quarter. I'm going to talk about first what that is. Number two, how that impacts different types of investors, namely news flow momentum investors and fundamental investors. And finally, I'm just going to talk about general takeaways of what I'm experiencing from reading through all of these documents. But before we get into that, I just want to make it crystal clear. Nothing in this video should be taken as investment advice. You should absolutely make your own choices after doing your own research. If you don't feel like that's something that you already know how to do, seek someone out in your local area that's a professional. I may use examples. I will disclose which ones I own and are actively trading. But again, that's not a recommendation. That's just using an example. Now, let's get into those three things that I talked about. Now, I do want to be crystal clear for all of those people that might already be actively trading. The 10K is definitely not the end-all be-all of which direction a stock's going to go, but it can be extremely informative no matter what your investment style is. Kitchen sinking the quarter is a term that refers to a strategy that management will take when they believe that they are going to get no benefit whatsoever on the price of the stock. Because there's something else going on in the marketplace. Maybe in '99 it would have been the internet bubble. In the 2008-2009 period, it was the obvious things going on with the debt crisis. And now it's probably coronavirus. So what the company will do is strategically enact and accelerate every action that would have been very expensive. They'll just do it a lot faster, take the hit on the quarter, and be in a stronger position on the way out. Now, while every company has the ability and possibility to do this, because we are kind of in the perfect storm for it, companies in particular that have had a lot of acquisition are even more likely to take it. Additionally, companies that need to spin out a portion of their business are highly susceptible to kitchen sinking when they can, because basically they are going to take all the charges and end up in the perfect spot on the other side of it to sell off assets that they wanted to get rid of anyway. Now, I think these things are really hard to see if you're just using news boards or reading the news flow or even going through the numbers via some sort of data service or through like a Yahoo Finance or through your broker. They are extremely straightforward and easy to see if you're reading the 10K. Now let's talk about how you would then use that if you're more of a news flow momentum trader versus if you're a fundamental investor. There are hundreds of styles of investors, but I'm just going to kind of go through these two general styles. You can decide which one you are. Each of them is going to be impacted and use the 10K and this concept of kitchen sinking in a different way during this type of environment. The first type of investor I'm going to talk about is the momentum investor or the news flow investor. And these guys are commonly day traders or swing traders if their horizon is a little bit longer. Other people that are in this camp are people that just trade stocks based on the news flow itself. They don't actually know the financial statements very well. In some cases, they may not even be able to read the financial statements. There's no shame to this because honestly, I have seen some best of the best in this area make great livings doing it. They have a gut for what people are buying and selling like no other. Now, the second type of investor is more what you'd call a value investor in some cases, a deep value investor in other cases, because there are value investors that don't in fact do this extra step. Charlie Munger, Warren Buffett are known for doing this for sure. They also do a bunch of other stuff that's also very cool. Now, which of these investment styles is better? Actually, I've seen people kill it on both investment styles, so there's no right way. For you personally as an investor, you got to decide which one that you are most comfortable with. I would say that if you were going to compare the two styles and the type of people they might match, the value investor, the person that wants to read the 10K, is a little bit like the person that goes into a grocery store and wants to read the ingredients list. Maybe they're allergic to something and they want to make sure it's not in the item. Maybe they are a dietitian or very focused on diet and nutrition, and they want to just make sure what they're getting is quality ingredients. The momentum investor is someone that wants something that just tastes good. They're down for it. They know it's a temporary decision and they're just going to move on quickly. Very, very different reasons. Both of them need to eat at the end of the day. Both of them have very different reasons for why they're making their choices. Now, both are very valid. There's no criticism to be made. And in fact, I probably have strong elements of both, both as an investor and also as someone who buys food. Like, I definitely try to shop and buy organic when it's possible, but at the same time, I have the McDonald's app on my phone and I will absolutely use it. Now, the fundamental analyst is going to use the 10K first before they make the investment choice. And they're going to be in this kind of environment, if they're worried about kitchen sink, they're going to look at what are the business segments and what were the margins such that you might see some strange activity during this period to cut the costs associated with it, cut headcount associated with it. They might also look at the acquisitions and look at the intangibles and goodwill that we're taking in. A lot of companies throughout 2018 and 2019 were very acquisition heavy, and all of that stuff is laid out very specifically, very directly in the 10K. Those fundamental analysts that are especially the ones that are on the stream end that really do all of the modeling, they're going to know that cold. Now, the momentum and news flow investors, they never read the 10K. Let's just be honest with what it is. But if they did, then when the news flow comes out, they can use that to inform how much they're going to push down the stock on the news, and also the potential risk if they do it, how fast the fundamental investors are going to come in and support it. And I saw some of this, like I said, in the last quarter. I'll give you a quick example. And I expect to see a lot more of it in the next quarter. Now, one of the stocks that absolutely did this in the last quarter, I do trade this stock actively. I'm not going to tell you which direction or how I've structured it in the options market, but it's Lincoln Financial Company. They do variable life and whole life policy, and they went ahead and took a life impairment charge of the full 2% off of coronavirus, because essentially they grew revenues on the top line pretty aggressively. Variable and whole life is not like every other type of insurance. You invest in it as a form of retirement. And since a lot of people were home and a lot of people were thinking about death and looking at their kids, they actually crushed it on the quarter. What they will do in this quarter, who knows? I have no idea. That's the beauty of this game of the markets, as we call it. Now, taking this tiny impairment charge isn't a full kitchen sink. It's just an example. Usually when you see a true full kitchen sink, they literally threw an impairment charge, some layoffs, this and another thing. But in fact, the fundamental analysts will be able to describe very clearly why the company is, one, not going out of business, and two, probably setting itself up to be in awesome shape on the other side of some type of event, another quarter, whatever it might be. That said, the way that the stock traded is very instructive. It traded down in the aftermarket, as momentum traders and news flow traders tend to be the first out of the gates. And then it found support even before the earnings call and rallied pretty aggressively into the call and for the months subsequently. Now, let me be really clear. I am not telling you to buy this stock or sell this stock. You should do your own work and think about your own investment style. If you are going to try to read this 10K, I think the insurance company 10Ks can be harder than others because of the nature of their business, but I would encourage you to consider values such as book value instead of earnings per share, which is going to be less relevant. None of these companies really use EBITDA because a lot of their income is interest. So good luck, read it. If it's your style to read the ingredients on a box like it is mine, it will make more sense the more of them that you read. first and foremost thing is the amount of disclosure that's in these reports. The amount of disclosure, especially among these S&P 500 names, is making me more endeared to how these corporations have an incredible and vital role to the livelihoods of millions of Americans. Now, we always paint corporations as these people that are secretive, that don't tell anything and are doing all these things behind everyone's back. I think that's typically the way people think of big corporates. And I know that the 10K is a little bit of a marketing doc writ by the CEO and CFO and all those people. At the same time, certain disclosures are a must do, such as the number of people whose lives benefit from the fact that that company continues to make money. In that context, when I hear news flow about paying off debt by the Fed and the fact that they're willing to buy up debt, I can't help but think they will probably help support some of these companies that have 80,000, almost 100,000 livelihoods and their children that are dependent on it. So it's something to consider that becomes front and center as you read report after report and how many people the CEO is responsible for keeping food on the table for. The second thing that I would say is that I didn't realize the degree to which the disclosure of customers and as well as suppliers exists in the 10K. In this time of coronavirus where you can't necessarily do your own channel checks, reading all of the 10Ks and then to the extent that it's relevant to your investment process or investment thesis, then listening afterwards to the news flow and listening afterwards to the call is a little bit like doing channel checks. So fascinating to see that as well. Now, I would say that the S&P 500 is typically going to be of a higher quality than, generally speaking, all the companies. Perhaps if you go farther down into small cap, you're going to have a different experience. I know that originally a lot of the 10Ks that I read before I took on this exercise were in fact in small cap. They were shorter, so it's highly possible that they disclosed less. In the S&P 500 though, you got to disclose everything. In fact, you got to disclose if a whistleblower sold you out to the SEC. That little piece of information was really only in one of the 10Ks out of the 300 that I've read. But other stuff that's really unpleasant is in there too, including anyone that's suing you, why they're suing you, and what the docket number is if you'd like to read more about it. So, you know, lots of stuff in there. I encourage you to read it, especially if you're the kind of gal that likes to see the ingredients before you buy it. I really want to thank everyone for liking, sharing, commenting, or subscribing to my channel. It means a lot to me. I really, really appreciate it. And I will see you next time. Everybody stay safe and healthy. Mwah!